We're good.
All right. Hey guys, this is Rash here, and today we have an amazing team. We have Brad Pitt, we have Brad Pitt, and we have JP Ong. All right, so let's just wait for a few more people to come on in before we get started.
Good afternoon, guys. Thanks for coming.
Hi everyone.
No worries.
I must explain. I was just playing with this yesterday with my friends, and I was just like playing the names, and I forgot to change it.
Very nice, very nice. So again,
I think it suits you, Pete. I think it suits you.
Thanks very much.
No worries, man.
So, anyways, guys, for those of you all who are watching today, we have a very, very special investment segment, right? So we have with us Pete and we have JP, right? So Pete is basically our head of mentorship in Buffett Online School. He's an absolutely incredible investor. He's a fund manager as well. And JP is a presenter. He's a finance presenter at MoneyFM, right? Absolutely amazing. Hi, Wendy. How are you, Wendy? Hi, Peng. Hi, Pang. Right. So again, that's JP, and JP is you all hear him talk later. It's a little bit angmo, right? So
I'm very angmo, actually. Let's not pretend. You know, I'm not. I am a grateful guest in this country and an observer of markets here and across. Thank you.
Wait. What's your origins, bro?
Born and raised in Manila, the Philippines, but I've lived in a couple of places: the U.S., France, Beijing. I consider Hawaii a different country in its own, but generally I've lived in a lot of places. But I would say 25 out of my 39 years have been 30 out of my 39 years have been in Manila mostly. So the other side of the ASEAN region.
Beautiful. So again, guys, you guys have three handsome men right now. The most handsome being myself. I'm just joking.
It feels like you sure this is an online seminar, an investing seminar, or a dating game, because it kind of feels like those cheesy dating games from the 90s. Anyway.
Dude, I like to have fun with my people, bro. I like to have fun with my people. But anyway, so today we have all your investing questions answered. All right, it's your chance to actually ask my head of mentorship, Pete, questions. JP is going to actually ask him some questions about Warren Buffett's recent moves. I don't know if you heard, Warren actually recently sold Goldman Sachs. Facebook recently bought Jiffy, right? Is that how you say it?
Jiffy, yeah.
Jiffy, right? So many things actually happening in the markets, and hey, JP is going to be conducting the session, actually sharing. And guys, y'all want to dig into Pete's brain. Pete is a genius. Right.
And also just remind people that you are also free to ask as many questions you want. We want to make this as interactive and as informative. We do want to answer the questions that most of you have on your minds. I'm one of you, by the way. I'm someone with a lot of questions. I seem to never run out of questions. I think that's why my dad can't stand me for too long, back in Manila. That said, if you have questions, feel free to type it out. We'll try our very best to get to it, us and the administrators, and we just want to keep this as free-flowing as possible. Just keep the conversation going, because the more information and the more interaction we have, the better investment decisions you guys can make. So
100%, right? So again,
100%.
Let's take it away, my friends. Pete, JP, you guys go. And guys, if you all have any questions in the comment sections, please ask questions, and we will be answering any and all of your questions. Let's go for an hour or so. Let's do it, guys. Let's go.
All right. So look, let me kick things off right now, and maybe just talk to Pete about this has been a very odd start to the markets, and I think it's fair to say no one was prepared for a possible pandemic. I mean, look, there are people who have said that the warning signs have been there that it could happen, but I think at this scale and at this speed, it really hasn't. And everybody, let's face it, everybody's been caught with their pants down. I'm wearing shorts, by the way, right now. The question though, Pete, is usually in these times of trouble and distress, this is when Warren Buffett tends to come in. Make moves. There are legends that whenever there's times of disaster, usually there's a lieutenant of Buffett usually in a market who's looking for some of these deals and saying this is the time to start swooping in. He hasn't really done that, actually. So I wonder, and it's hard to read into somebody's actions, but since this is the Buffett Online School, and I take it most of your followers, most of your attendees tend to follow his principles also. Why do you think he's been a little less reticent to come in?
JP, thanks for the question. I think it is a very good thing to observe what Warren Buffett does. If you look at what Warren Buffett has been doing, he's been sitting on piles of cash. Currently, I think with the current sale,
137 billion,
yeah, about
I believe,
130
US dollars.
billion. Yeah, I think so. Right. And with him trimming down on Goldman, JP Morgan as well, and he totally exited Travelers and also Phillips 66. I think right now he's probably at a range of 140 billion.
So what is he still in? Apple?
He's still in. Yeah. So the key thing is, many people thought that Warren Buffett is still actively making all the decisions of himself, but actually he's not, right? He has a team of people, Ted and Todd being the most famous people among them all. It's very obvious that they are the one doing the investment, because Buffett himself has ever said, right, he's never a tech guy, right? He doesn't really understand how the tech works, and that shows in his portfolio. Yeah, that shows in his portfolio. So and he mentioned that, you know, during the recent AGM that a lot of the purchases was actually done by the team, right? And he didn't even interfere or ask them why, but because he trusts the team enough, right? So I think the main thing we need to ask ourselves is right now, Berkshire Hathaway is the one selling. And once again, is it Buffett selling or is it the team selling, right? And I think regardless, the main thing I suspect for Warren Buffett to still not go in, you know, and scoop up shares like what you mentioned is simply because the US is still expensive, right? If you look at in terms of valuation, traditional methods, in Warren Buffett's lens, it would still be expensive, right? You look at K ratio wise, it's still not cheap, right? It's still in the range of like 20 over PE. So there's no good reason for Buffett to come in at this point, I feel. And for him, if he were to buy shares, that is very unlikely he will just buy part of the business, right? It's very likely the moment he makes a move, it's going to be an elephant move, right? He's going to buy out a company or sort, right? Unless he's buying into Amazon or Google. Right, so for him, he's not as nimble as retail investors, right? Retail investors can just buy a few shares here and there, diversify out. But for Warren Buffett, no, not really. When he wants to buy, he's probably going to take a huge chunk of significant ownership. Yeah,
right. So you said that the U.S. markets might be too expensive at the moment, and there is evidence of that. In fact, it's not just Warren Buffett. There's other great investors on Wall Street, Stanley Druckenmiller, David Tepper, they've all said they've never seen valuations this high, and they're scratching their heads at the moment. Why are the markets moving up? So US markets might be expensive at the moment. Do you think that applies for, say, markets in the region, specifically Singapore, specifically around the Asia Pacific? Because I would imagine that most investors here, if we're following the tenets of Warren Buffett, that you should invest in what you know, they'd probably know a little bit more, and I'm just assuming that they'd probably know a little bit more about companies based in Singapore and across the region than say what's going on in the deep depths of the S&P 500 or the Nasdaq, right?
Yeah, I think that is what most people would believe. Actually, I feel that is something is a bit misunderstood, right? Like for example, if like for yourself, you were from the Philippines, right? Perhaps it's fair to say that you probably know the Philippine companies a bit better, right? But in terms of governance and transparency, I would still say that US is probably the best, right, for you to find information, ready information, even compared to Singapore, for example, right? In Singapore, some of the companies...
Can you elaborate on that, actually? Why do you feel as a Singaporean that it's harder or more challenging to find information here versus, say, an American company?
I think the issue is that Singapore market is very small, right? The SGX has about 700 over shares as stocks, sorry, and pretty much no one else invests in Singapore other than Singaporeans, right? Very few institutional players will really come in and take notice of a small company, except for the big banks or whatnot. So there's very few research done for small countries, emerging markets. The research is just not as mature and as in-depth as overseas. Like for example, if you were to do just a quick Google search on like Facebook, right, you will find tons of research and analysis very easily. But for Singapore, right, even if I ask you to give me a few international reports on one or two main companies in Singapore, it's very hard to find. So I think actually for most international retail investors, US may still present a better risk to reward ratio, simply because it's more transparent, easier to find information, and the governance seems to be more stable. We all know emerging countries, the governance can be a bit iffy sometimes, right? Even in Singapore, we had a lot of governance issues. So So that's my thought. I think US still stands a best chance of risk to reward, right? Singapore stock market dropped equally during the recent drop, but it has not recovered as much as the US.
So again, back to the question: do you feel that the markets in the region are also perhaps too pricey at the moment, thus making a justification to get in? Perhaps still. I mean, look, we've seen the Straits Times Index drop from 3,400 a few months ago down to what is it now? It's below 2,600. So we're talking about an 850 point decline, thereabouts, right? And people have been nibbling at these positions. People have probably said, you know what, I couldn't afford. Let me think of a good stock here. I couldn't afford to get into DBS, and now I can. I couldn't afford to get into, let's say, the Jardines, but now I can. But it's what's the danger? I mean, do you feel that they're properly priced here?
I think the main question would be, what is your portfolio's objective in the first place, right? And for me, I don't really invest in Singapore because for me, I'm more geared towards growth. So I'm really more towards the US side of the house or even international. To me, Singapore just doesn't present a lot of growth opportunities, right? So even if, let's say, DBS is cheap now, it's cheap, but how much upside can you expect out of that, right? Would it go back to 20 plus, perhaps, right? How long would it take? That's another question, right? So to me, I feel that for me, I'm not very into Singapore at this moment for growth. But if you're going for dividend, right, for sure, right? Singapore is the best tax haven for dividend investing, right? You don't get taxed at all. So if that's your objective, then yes, right? But for me, the objective is growth. Then I'm not looking at Singapore, perhaps, right? And Singapore, yes, it's cheap traditionally.
But that's not the only thing to consider.
Yeah, that's not the only thing to consider. And the thing is, looking at Hong Kong and looking at Singapore, China, perhaps, right? Hong Kong has been cheap for a very long time.
No, that's actually the question about the Kamal, I think, was hinting at here in the chat group. How about the Hong Kong market? Go ahead, Pete. Take it away.
So I think Hong Kong has been cheap and for a long time. So the question is, yes, you're buying it cheap now, but how long more would it become? Would it stay cheap? I think that's a very, very important question. And I think when you look at recoveries, I think maybe Hong Kong stands a better chance than Singapore. I believe, right? As a Singaporean, I hate to say this, but I think our equities market is not as strong and not as mature as the Hong Kong market, for sure. And
why do you think that is, though, Pete? I mean, what's your opinion? Why do you think the Hong Kong market still? Is it just because Hong Kong has all that access to mainland Chinese liquidity, or is there something else that makes them more mature versus? Because I don't know. For me, I'm a Filipino, and one of the reasons I took this job also because I wanted to cover a bigger market. And when you talk about big markets in the ASEAN region, I mean, this is arguably, this is like a move up. I mean, I liken it to, I liken it to sort of me moving from Watford up to Everton, if I can use a Premier League analogy here, right? And no, but I mean, but think about it. I mean, okay, maybe it's not exactly it's not a top 6 market, but it's a pretty big deal, right? I mean, just saying, right? So, but then you start using that analogy. It almost seems that Hong Kong might be up in the top 6, right? It could be a United, it could be a Liverpool. Why is that? What's the difference? I mean,
you probably have to ask SGX what are they doing, right? But
fair enough.
But the key thing I see is that, for example, the number of stocks in Singapore is dropping, right? We were in the closer to 800s. Now we are actually much lower. And you can see many Singapore companies actually getting delisted and then relisting themselves in Hong Kong, right? Hong Kong seems to be the preferred
story. Is it a liquidity story?
Yeah, I believe it's just there are more investors in Hong Kong, right? Like what you mentioned, there's the backstop of China, and traditionally Hong Kong has been the entry point for overseas, right? Into Asia market or even into China as well. So I think if you're going for something that is more growth oriented, you want the value to be realized. I think bigger market is definitely better, right? Which is why US tends to have that little advantage as compared to smaller markets, for example, Singapore, right? And my main concern is still whatever was cheap can remain cheap for very long, right? So it really depends on what's your investing thesis, what's your objective, and yeah, if you're buying for dividend, I think Singapore is fine, right? Your REITs, bank shares, they are great. But
so do you own any positions in Singapore right now, Pete? If I may be bold,
I do. No. Please go ahead. I do. But I have one criteria. Once I share, you must share as well.
Okay, fair enough. Yeah, but you have like 1 or 2 toes in the Singapore markets.
Yes, I do. Mainly using the CPF, right? The Singapore CPF system, because CPF is like, there's a lot of regulations on what you can invest in. So I'm pretty much stuck if I want to use my CPF. So I do that in Singapore, buying Singapore shares, mainly in the REITs and banking sector, right?
Okay, got it.
What about you, JP? What about you? Do you invest in Singapore?
Well, I'll be honest with you, Pete. I'm about to reveal something here in the market to your audience. I don't really invest in the markets, and I'm going to tell you why. My previous job, I used to work for another news agency, and they had a very clear.
Can I say it here? Oh no.
What's that? Yeah, I can. I used to work with Bloomberg a long time ago, a few years ago. Bloomberg actually has a rule and it's part of the ethics, that you as a financial reporter and as a business reporter cannot directly invest in the markets. Now, what I can do is I can invest in an ETF, I can invest in an index, I can hand it off to a discretionary money manager as long as I do not call the shots on my investment.
So long you don't do it yourself,
Is because if you are an investor or if you are if you are covering the markets, and let's say I have a position on ST Engineering or SATS, right?
Or front run the rest, right?
Airlines, and I go like, hey, that stock's really going down. I might have an inherent bias to try and pump up that stock through a favorable report. Now, that doesn't say that's very difficult, by the way. I just want to say, as someone in the media, it's not as easy as it looks, because people aren't stupid. People will see that will suddenly notice that, hey, there's a bit of a bias in JP's reporting.
Unless you're
and then so it's not as easy as it looks, even if I wanted to do that. But I think it just carried over for the longest time. The second thing is there is a chance to come back into the markets. I've thought about it, actually, given I've been covering markets for about 5 years. But again, it goes back to that question. We were talking about this before the panel actually opened up. Before the panel opened up, we were talking about, well, timing, I think, is a question. For me, I think the biggest question in life and the most important questions in life usually start with the word how. I think how do we get out of the circuit breaker measures? How do we make sure that people's public health lives are protected? How do we make sure the economy isn't impacted? How do you get into the markets, and how do you time coming into the markets? Because the question now is, okay, these are attractive levels, but as you said, some markets are still expensive. There's still the risk of come down. So, for people with who are not that familiar again on the markets, who are not that familiar with timing, or or who don't have the appetite to deal with, okay, my position went down by 3% today, but then this could just be a really bad day on the markets and I should wait it out. Usually when you take these positions, you don't really, if you're an investor, you're not in it to check your portfolio and make 15 trades a day, because
right?
And all the other question too there is, the transaction fees are just going to kill you, right? But if you're new in the markets, this could happen. You're like, oh no, my position went down, I should get. So the question, I think, Pete, for at least one of my big questions coming into this also, and the question I ask a lot of strategists also is, well, is this the time to come back in? And there are probably 15, 20 different answers, right? So, I think that's the question for. I know that there's a couple of new investors here who are probably thinking about dabbling or expanding their positions in the markets now. I think the question now is, well, is it safe to get back into the water? Is the shark still there?
I think as a retail investor, of course, once again, it's about your objective, right? But my opinion for new investors is, if you are not like me or Rash, we are looking at individual companies, right? Perhaps one of the easiest way, right? So we talk about the how, right? The easiest way is to just go into the index first, right? Just just start with the index, right? You're pretty safe in terms of diversification, right? The fees are low, and the thing is, the key thing, like what you mentioned before the call, right, is not to go in like guns blazing and buy everything, right? It's to keep your bullets, just trickle into the market. I always tell my students, right, you want to walk into the market and not rush into it, right? So even right now, if you were to buy at a S&P, yeah, the S&P or the Nasdaq could go down another 400 points next week or whatnot. But if you're just averaging down your position, if it's going down, right, and you have a long-term perspective, so that's also very important, right? You will see that generally you will do well, right? You just look at the US market. In fact, US market in general. That's why I also like to look at US market, because if you have a long-term horizon of at least 5 to 10 years, generally you will do fine, right? You will generally do fine. You may not be the most profitable investors out there, but you will still beat most other investment class by far, even in property markets, right? So I think the few main things is, if you're new, you're not looking at individual companies like I do, right? Just buy into the index, be diversified, and just have a long-term horizon. Even if right now it's not the best price, but guess what? Warren Buffett also didn't get it at the best price. So if he can't do it, I think all of us can, right?
No one's perfect. Not even Warren Buffett, right?
Yeah, Warren Buffett. Yeah.
Oh, by the way, I'm looking at this comment from Joshua Wong. I'm sorry for the Singaporeans out there. I hope I wasn't insulting if I compared Singapore to Everton. I'm sorry, guys.
I love Everton.
It's not a bad team, by the way. I just wanted to say, okay. Just to answer Roger,
definitely not the top. Everton is definitely not the top.
But they always give you a hard time, right? It could have been worse. I could have called you guys, I don't know, Wolverhampton or something, right? It's I think that's more
Crystal Palace.
at the moment. But it's all a question of development, as you said. Joshua has some interesting points here about what is your view on the political headwinds right now that are beyond average investors' control versus the extremely stable political situation over here, which might affect the stock market. Before I let you answer this, Peter, I just want to offer a 20-second commentary or two. A lot of these things, and I think it also applies to life, I think you just have to be able to identify what you can control and cannot control. And I'm sure a lot of self-help gurus have said this too. I think in investments
I love that was what I was going to say, actually.
Yeah. So but it's true. These headwinds are going to create more volatility. I think we've seen that over the last week. I mean, President Donald Trump just recently said on Fox Business News, I might even consider severing ties with China altogether, trade ties, that is, he said. Now, we don't know if he just said that off the cuff, if he actually meant that, or if, there is a lot of leaders tend to say just what's on their mind very quickly right now, and in the heat of the moment. But I think, but the other thing too is that when you have very stable positions, and this is what I've noticed in Singapore at least, yes, it's a very stable political situation. I would say compared to 95% of the rest of the world. Maybe the Vatican's more stable. I don't know. But in some sense, when you have something very stable and relatively, can I use the word predictable in some sense? It doesn't lead to as much. It becomes what you call steady in some sense, Pete, as well. Do you think am I off on that as well? I mean, so there's upside to having stability and dependability as well. But if you're looking for those growth opportunities, as Pete said, if you're looking for that bang for your buck, I mean, Singapore will probably get you from A to B, and you probably won't. Your car is not going to break down as often, but if you're trying to hit 100 kilometers an hour on the freeway, maybe not. So can you maybe you can address some of these things that Joshua actually brought up. How do you position and how do you deal as an investor with some of these political headwinds that we've seen just escalate, not just this year but also throughout last year as well, right?
I think the key thing, like what you mentioned, right, is to just think about what you can control and what you can't, and just ignore those that you can't, right? So for political situation, pretty much none of us can do anything unless we're going to run for office. So the key thing is it really is there an evidence fact, right? Evidence-based fact that political situation correlates to stock market price performance, right? The answer is actually no, not really. Not that I've read before. Think about it, right? Think about it. in terms of political situation in China. China's political situation is pretty stable, pretty stable, by different means, of course, right? Did that show in their stock market in the last 10 to 20 years? No, not really, right? But in the US, right, it has always been back and forth, like a tennis match between the two parties. Very unstable. They are switching rules every other day, right? But yet, that's one of the best performing market you can see right now. So I think when we are concerned about certain things like the political situation, right, we need to ask ourselves: is that does it really matter, right? Is it more of my own sanity that I just want to feel safe, or is it really there's a correlation to look at, right? I think people will probably do better if they just look at, hey, CAPE ratio, where there's a real strong correlation value, versus something that is a bit iffy. It's more of like it's a good talk conversation, right? But it doesn't really help you make better investment decisions.
Yeah, I think what I'll just add to that before we go to other questions here too, Pete, is I think it depends on the political instability that you're looking at. So for one thing I've noticed also, and the last 5 years, I've whenever you look at markets, when something, so first you have to ask yourself, what is the political instability? Is it something like a terrorist attack?
And if it's like Afghanistan, then it's totally different, right?
Unless it's something of the scale of 9/11, and I saw the markets tank after 9/11, right? But if you look at there were two instances I remember when we covered, say, a bomb blast in Thailand, in Indonesia, and the attack on Charlie Hebdo in Paris. Their respective markets, the CAC 40 in France, the SET in Thailand, the JCI, they all fell dramatically the very next day for about 2 days. But what was equally dramatic is how quickly they bounced back. A lot of analysts actually say that these are knee-jerk reactions by markets. So you have to remember also that there is a lot of emotion in the markets at the moment, and people will. So if you see a sudden drop, you have to ask yourself, well, is this just a knee-jerk reaction? Is this just a lot of traders on the floors who just threw up their lunch, and then so when they finally got their bearings, they just said, you know what, maybe it's not as bad. We should probably get back into the markets, right? That's one. Number two, I think you have to ask also, when you look at the political instability or the political headwind that's coming, is that going to impact the integrity of the market? I think that's the bigger thing. So let's say China, for one, right? You might say there's political instability in mainland China. I might say it's actually very stable because they just have a clampdown on everything. So it's stable in some sense. It just doesn't really. There are a few flare-ups here and there, but generally the Communist Party tends to
very stable. They have very good control,
right? But or let's say Hong Kong right now. There's a lot of reasons for people to point at instability in Hong Kong. But the question is, has that undermined the integrity of the market? Has that undermined the integrity of the economy? One thing, and I think one reason why people were fleeing, say, Malaysian markets and Philippine markets in recent years, in more sustainable pullbacks, right? And this is something I've noticed. I've only been looking at the Malaysian markets for about a year now. I just caveat. So some of you might actually know more than I do. There were serious questions about the politics going on. There were serious questions about, well, are you going to tax some of these companies more? Well, are you going to suddenly make this a witch hunt, about business leaders? Is this going to turn into are you going to slam on? Are you really going to hit foreign investments hard? And that's why you saw Malaysian bonds suddenly fall, right? Over the last, they've been recovering, I think, recently. From last I checked, I'm not sure. You saw Philippine markets, they wobble, but then they were not at the same heights we were at, say, 3-4 years ago. I think there are some. So I think whenever you go into political, I think it's something you have to factor in. And sorry if I'm pretending to be an investment guru here, right? It's not my concern. But what I've noticed, and just what I've noticed as a journalist, is whenever you see these movements, you have to ask yourself, the bigger question you'll ask yourself, and the follow-up question, which I think is more important, is will this instability or will this new political headwind introduce more uncertainty and undermine the integrity of that capital market? So, for instance, in the US, trade wars, all these things.
Or once-off, right?
Yeah. So I think that's, for me, that's just my commentary. Before I start hijacking the whole conversation, that's just. I think that the more important question there is, will this impact the integrity of your capital market? And I think it depends, right? I think that's why more research has to be done if you're going to trade on these political and macro headwinds, right?
Yeah. Definitely. I think actually when situations like this happen, for example, when there's bombing, I mean, these are sad events, right? We're not wishing them to happen too often, but when they do and they provide the opportunity, I think the most important thing for a lot of retail investors is to have that confidence and start investing, right? You don't have to go in and throw in the kitchen sink, right? But start buying them in batches, because even right now we are still at about 13% cheaper than for US, for example. We are about 13-14% still cheaper than where we were back in January, February, right before it started crashing. So even if not by Warren Buffett's measure, just by relative terms, right, we are still cheaper. We are still at a simple discount, right? So if you don't want to buy a bit now and you want to wait for it to drop further, then my question to a lot of people is that, are you going to expect another virus outbreak to happen again, right? And the thing is, who is trying to predict the future here, right? So it really doesn't matter whether the market drop later on or you'll go up from here. The key issue is that if you don't just buy a bit now, if it really runs up like the V shape that a lot of people are talking about right now, you're gonna totally miss out. You're gonna sit on that pile of cash and you're gonna like, wow, right?
Okay,
but
so
if you're just buying a little bit, it doesn't hurt you, even if it drop another 50% from there. But
okay, so
that small chunk will help you if it goes up, right?
So here's a basic beginner question for people who are not in the markets like me. If I am thinking about saying, you can relax your journalistic standards, you should go back into the markets. How do I do it? Let's this is something I've asked Sean actually before. How would you advise somebody would say 2,000 Singapore dollars and saying, you know what, I kind of want to go to the markets, but these are my bullets. This is all I have at the moment, and I want to build a position. How would you advise them to go in, and at what pace would you advise them to go in? I mean, what's a sensible way? Do I just put everything into the STI or the S&P 500, or do I do it? Do I buy do I put it $5 a day? Give us your thoughts, Pete, because since you also at one point were an investor who was probably coming in going, well, how do I start? What's my first step?
Yeah. So I think if you're starting brand new investor, you perhaps don't want to buy individual companies, right? That will be too much concentration risk, unless you're very confident about a single company, right? So for me, I would suggest for someone that's beginning with 2,000 US dollars or Sing dollars, just go into index first. Right, just have a feel of how is it like to invest, right? Of course, I would say that please don't start with 2,000 and then never add on any more capital, right? That will be not the best way to invest, right? So if you have $2,000 this month, you want to throw in a little bit into the index, that's fine, right? You want to do it in STI, S&P, I leave it to you. I would prefer the US index for sure. Okay, it's just cheaper in terms of expenses wise, and it's just I feel that it's much better exposure to the better companies, right? And you can just do it on a consistent manner, like once a month, right? So you do it across 4 months, right? And then when you have new capital, you can add it in, right? And then in the duration, please go ahead and find out more about investing, right? Like that's what we do at Buffett Online School, right? Is if you don't want to just look at the index, you want something that produces a bit more alpha as you go, then yes, you need to look at individual companies. But if you're just starting out, you have never done any training, you've done never any sort of classes, then buy the index in drips and drabs, right? If you have a long-term horizon, your chance of success is so high that it's ridiculous, right? You just look at the Nasdaq and the S&P graph. I don't think anyone has lost money if they extend their time horizon more than 15 years. Yeah, so that's how powerful the stock market is, and it give thanks to Trump. I mean, he's inflating the market like crazy, and the stock market will be one of the few to be inflated as well. So so that's the simplest way to start investing.
All right. Okay, so indexes first. and
then find out more about individual
basically,
companies if you want to.
and more importantly than where you start is how much you add on a periodic basis, right? So don't stick with 2,000. Maybe put aside 2,000. Put maybe 50 or 100 a month, depending on how much, because people aren't
income
people
you bring in.
Money, right? Right. So okay. Well, here's an interesting question from Jennifer. Building on that also. And this, let me build my basic question on top of Jennifer's also is which platform we can leverage for US stocks.
Leverage.
I think so. Let me make a confession too, Pete. One of the reasons why I've also been very reticent to get in the markets is because I am what I call a tech caveman. I tend to get very stressed out by technology. I was trying to make a donation for the lung center in the Philippines today in my online banking, and I almost lost it. See, that's the level of tech stress that I get. I can't stare at my phone too long. I can't do these things. So the thought of getting on an online platform and starting something, actually, I'll be honest, sometimes makes me anxious. Sometimes it makes me go, what kind of problems? A small story too is I have a roommate who recently took on a couple of positions and opened up with 2 platforms. And he spent about the next 2 days fighting with the one of the platforms because he couldn't execute his trades and didn't tell him what to do, and apparently it was slow or anything like that. If people are coming in for the first time and picking a platform, Pete, because there's so many of them, right? I can probably rattle off 5 off my head right now, and each of the banks has one. How would you? What are the things you look for a good platform, and how do you determine that? And maybe share with us what platforms you use.
Yeah. So I think a few simple rules will be, firstly, depending on which country you're from, whether it's even available to you, right? That's the first thing. The second thing is the trading fee should be relatively attractive, right? Right now, in the US, it's actually literally free, like, which I don't think it was a good thing because it just makes people want to trade more, but it's crazy. But in Singapore, actually one of the best platform I can think of is TD Ameritrade, right? They actually have a physical office in Singapore, right? So you can actually just drop by the office, get it open, and the experience was really good, right? It was within 1 day. And
do you have to open it physically, or can you do it online?
You can do it online. But I was in the vicinity and I just dropped by, right? So yeah, either way, you can do it online in the physical office as well, right? Otherwise, you can use interactive brokers. That's one of the biggest one in the world for retail and institutional players, right? But I think the key thing I want to share with everybody is that there will be some technical difficulties setting up the account. Maybe your trade initially didn't go through, and then you're trying to find out like what to do. You don't even know which button to press, right? So all these are normal, right? You need to expect to have this sort of things. It's just like you picking up any new skill, right? You will definitely face some issues, right? When you are first learning how to cycle, you probably fall a few times, right? The key thing is you want to tell yourself is that, are you going to let these simple technical issues, administrative issues stop you from investing, right? If that will stop you from investing, then I would say your reason to invest is not strong enough.
So let's get back deeper, Pete. What platforms are you? You're using TD Ameritrade. Is there anything else you're using, or
I use TD Ameritrade. I use interactive brokers, both of them,
and they get you good exposure into the US markets.
Right? The whole US market pretty much. Any asset classes. I think you want to do futures as well. You can do it there, options as well. I don't really use the Singapore banks to do it because the fees are just much higher, right? So yeah, I'm using both platforms because I split up the investment just to diversify the SDIC risk a bit. Yeah.
All right, got it. Let's go to Lai Keng Wei here as a question about the US dollar money printing and the politics right now. It seems that Mr. Lai, feel free to correct me, but it seems that based on your position, you are expecting a drop in the US markets because of the wanton money printing and political decisions made by the government. And not here to criticize that is always a possibility. How do you hedge the drop against this, since many retail investors in the US stock market hold US dollars or stock denominated US dollar? Basically, I think he's looking for protection against a possible devaluation in the US dollar. Although I will have to also point out that the US dollar, I believe, is still at one of their strongest levels in about 2.5 weeks. And mind you also that after November 2016, when Trump had that shock win, we saw the dollar for the first time in business use being anointed king dollar. So, but nevertheless, if this is the thesis that the dollar is going to weaken, because of the wanton money printing, and I want to get deeper into that also. How does one hedge the drop, hedge against the currency risk of the US dollar, especially since it seems that US stocks might still be one of the ways to go?
Yeah, so I'm going to give a very controversial view. Don't hedge.
Sure.
Okay, don't hedge. Because there is no simple...
Don't hedge.
Yeah, don't hedge. Because there is no simple and effective way to hedge. Right? Your best hedge is by investing in the companies that's in the US market. Right? Think about it. Right? The US dollar may devalue. Right? Your iPhone, right, that costs you maybe $1,500 US now, when it devalues by half, it will just cost you $3,000. So guess what? The companies will still be highly profitable. They will just make more money in terms of dollar value, right? If the US dollar drop, you get what I'm trying to say? So the key thing is the US printing is not something new. They have been printing for ages, right? The US dollar has been depreciating for the longest time that we know, right? There are even charts online that you can find that shows that it depreciated by 90%. I'm not sure, right? But my key way to hedge against any currency devaluation is by investing in very strong companies, because strong companies, they will continue to produce good products and people will just pay for it, right? And if there's a real currency devaluation, what's going to happen? The price of the product is going to go up, right? The same iPhone costing $1,500 now, and let's say US dollar devalue by half tomorrow, it's going to cost you $3,000. That's it. The companies will still make in the long run. So the key thing is, I don't think there's a need to hedge against the US dollar if you're investing in the stock itself, right? But if you're holding a lot of cash, perhaps, all right? Which is why I think in the short run, I don't think US dollar will devalue a lot, like too significant to impact anyone's portfolio, for example, right? But in the long run, it's never a good idea to just hold cash, because that one's for sure, right? Even Buffett himself said before, holding cash is just a sure way to lose your money because of inflation, right? Whereas inflation benefits businesses. Inflation benefits.
But then again, But then again, Berkshire is holding about $137 billion in cash right now, and even more since he's exited Goldman and JP Morgan. Isn't that kind of contradictory to what he's advising?
Correct. So, but remember this, even though he's holding 130 billion, right? But the majority of the Berkshire holding is still invested, right? If you take the total Berkshire value, I think it's in the range of 400 to 500 billion. I don't have the exact number with me now, but the cash holdings is still a smaller percentage. So if you're holding like a 30% cash, that is what Warren Buffett is doing right now.
Okay.
Right? And to him, the cash is an optionality. If you were to see great value, he's going to pounce on it, right? And like I said, when he pounds, the earth shakes, right? He's probably going to buy something that's huge. So for him to hold 30% cash in the midterm, I think it's fine, right? He always want to hold cash. That's what he mentioned in his AGM before. So even to him, a little bit of devaluation in terms of US dollars, it's not going to make a big difference to him, because the large part of Berkshire is still invested in the stock market.
Okay.
Or private businesses for that matter. Yeah.
Okay. All right. Let's look at some of these other questions that people have. LS Cheng, I think we touched on this a little bit. What's the trading in the environment, trading options or futures or just stocks? I think we touched on that a bit. I mean, options and hedges. I maybe you can touch on that a bit more, Pete. But more importantly, I think is the second part of his question here. What should he do with his underwater blue chips? Should he sell or should he hold? I think that might have to depend on the industry and how it's impacted, though, right?
Yeah, exactly. So I think when people say they bought a blue chip, I will always ask, like, do you understand what that company is, right? Because many things lumps under the term blue chip. I'm just going to give a full disclaimer. I'm not invested in the company that I'm going to use an example with, but I'm just sharing my own personal view, right?
That's actually better. We know you're not trumping up the company. So go ahead.
Yeah. look at SIA. SIA is a blue chip in Singapore by people's standard. I don't know how you even call someone a blue chip. What's the entry criteria? I'm not sure. But SIA is definitely one criteria. But if you're holding SIA now, right, using as an example, then you can ask yourself, going forward, are you confident that SIA's business will recover and going back to its former glory, or in fact surpassing it, right? So it's not about whether the blue chip is underwater now or is it not underwater now. The important thing is, what do you see for the future of the company? And you don't have to be a business expert to just get a sense, right? I mean, maybe simply put, let me ask you, JP, right? When would you feel comfortable again to travel for, let's say not for work, let's say no one compels you to do it, right? When will you feel confident enough to travel?
Me?
Yeah. Timeline wise, a few months, a year, or what?
Every day I pray that I can travel tomorrow, but I think honestly, my range is, I think the realistic for me right now, and I'm no expert at this, maybe the fourth quarter. Maybe the fourth quarter,
yeah. So,
and mid of the fourth quarter. We're talking November.
Exactly.
We're talking Christmas holidays, maybe. And I might even avoid to do that, because then you'll see a lot of people traveling in Christmas, and we don't know what happens in winter. Yeah. So many things to factor, right? Yeah.
Exactly. So actually, I wasn't trying to push an answer from you, right? But the key thing I want to highlight is that there's so much uncertainty about the future of travel, right? Mm-hmm. There's so much uncertainty, and traditionally ask yourself, like, has airline been a great business, right? Evidence-based, right? Go and find out the numbers. Are they making money or not? All right. Those of you who learn from me, you know my views on the airline industry. So ask yourself the question more on, like, what is the business, rather than just saying a broad stroke, like, oh, all my stocks are underwater. Should I sell them now or should I hold them now? Right? We are not in the business of timing the market too much, but I rather people really look at the individual business. If they a bit too lazy to look at individual business, what I would suggest is, just go with the market. Just buy the index, right? That will save you a lot of trouble, right? But if you want to buy individual stocks, then you must be in the business of reading up on the business, finding out more about them, what do they do, how's their margins like, and things like that. And airline traditionally has been a very bad business, in my view, right? Because the margins are low, the overheads are high, it's a highly unionized business, and highly competitive, right? It's a commodity business. People fly simply with no loyalty. They will go with whatever is cheaper, unless you are flying first class all the while with one airplane. But 90% of the travelers will just go with whatever is cheapest, right? They will cram themselves like sardine. They don't give a shit.
No, are we allowed to swear at this platform? I'm kidding.
I don't.
Anyway, so this is actually interesting, because earlier at the start, Jennifer had a question about the airlines a while ago, and Pete touched on that. So you inadvertently answered one of her early questions, Jennifer Liang. I'll add this, okay? When you're looking at a company, and one of the questions I have right now, though, so Fed Chair Jerome Powell very succinctly outlined something that I've been thinking about for the last month or two. The question isn't, well, will we get out of the virus, right? Will we find a vaccine? It's not the only question we have to ask. The question is, who's going to survive this? Who's still going to be solvent, meaning who's still going to be standing, who will have to close up, right?
Very good.
So the question now, and Pete, I want to invite you to nominate a few things, because again, the question, I think the most important question is how do you determine who's going to survive? So Singapore Airlines just raised 8.8 billion Singapore dollars in cash, which is why the stock price came down. That's the stock rights offer. I hope nobody was holding those leverage certificates that went down to zero last week, right?
Those was zero, man.
No. Remember that thing, right? So here's the things I've been looking at a lot, and the thing I focused on when I looked at Centurion's numbers, for instance, yesterday. How much money does a company have at the moment? If they were to completely not be able to operate, will they have enough cash to ride out the storm? So if my thesis, for instance, is that Singapore Airlines is probably not going to be able to come back to 50%, 30%, 35% capacity and see some cash flow by the fourth quarter of this year. Well, how much money do they have at the moment? And can they outlast this? What's their debt levels at the moment? Will they be able to service their debt levels or refinance their debt levels? You'll have to look at the cash flow statements for their cash flows. Actually, not now because, geez, I don't even know if they have any cash coming in, apart from the raise, right? You'd have to look at their balance sheets. How much cash on hand do they have reported there? You'd have to look at, say, whether or not their expenses are being trimmed over time so they can make sure that it doesn't bleed as much.
And their oil hedges are killing them. So.
Yeah. So, but again, I will say also, as somebody who looks at this too, it's a lose-lose situation. You know, if you're an airline, I empathize with them on one thing. If you don't hedge against oil, you're going to be blamed for not securing your positions moving forward. If you hedge against it and it loses, like, oh, well, then you got too aggressive. Nobody expected this to happen. I don't think anybody expected oil to collapse that much. And maybe you can criticize Singapore Airlines for building out a hedge 5 years ahead. Maybe it's a little, hey man, it's a little too long. But it's hard because I've heard the same criticism for Cebu Pacific in the Philippines. They never hedge against oil. And they also saw their costs actually go up beforehand because, well, why didn't you didn't see the rise in oil in 2017, 18? Why didn't you hedge against it? So damned if you do, damned if you don't if you're an airline. But going back to that also, Pete, these are the things I look at, right? Gearing ratios, how much debt to equity does this company cover? What's their cash position? Will they be able to ride this out? Because I think the question now, apart from, well, will this blue chip be okay? Will this blue chip actually survive, especially when you're talking about the airlines? What other metrics do you look at to determine whether a company is tough enough to survive this crisis, whether a company is tough enough to come out of this? Because whoever comes out of this as a survivor, I think, is going to thrive. But it's a question is if you're going to survive. What else do you look at apart from those things I mentioned?
I think for me, a huge part of my analysis, right, numbers to me is the second or third phase of my analysis. The first part of the analysis I always ask myself is, this virus basically accelerated whatever that was going to happen for 4 or 5 years into like 2 months, right? So if you're a lousy business, if you're well funded, maybe it will take you 4 or 5 years to die, right? But with this COVID-19, it just shows you which are the lousy businesses, and it will just accelerate the demise of this business into a 2 months, 4 months, 2 to 4 months window, right? So the question I ask actually is not what company will survive this. No, I don't really ask that question.
All right.
If you ask me, will SIA survive this? I will say almost for sure. Why? Because the Singapore government will backstop it, right?
They kind of did,
like
the
US.
They kind of
did. Right? They dilute every shareholders by more than half, right? It's a 2/3 dilution, right? So and we see that in the US as well. Donald Trump has mentioned that they're going to protect the airlines, they're going to save them no matter what happened. Okay, so I wouldn't even look at these companies, because when we are investing, right, we are not just going for companies that will survive, right? You need to ask yourself which company will thrive, will really make the best out of this situation and emerge so much stronger, right? And I think without a doubt, it will be from the tech industry, right? Without a doubt, it will be from the tech industry, because tech is the only thing that is enabling anything to work right now, right? The fact that we are talking to each other right now is all tech enabled, right? There's anything that is going to do with the physical space are all kind of coming to a standstill. So I really want everybody to put on a different lens, right? To not just say, oh, I was holding on to these company shares and I don't think they will die, so I'll continue, right? You're literally a fund manager for yourself if you're not doing for a big fund like what I do, right? You need to allocate your capital. So do you want to allocate your capital onto a company that will just trot along? They won't die, but they'll trot along. Or do you want to allocate your capital onto a company, right, that because of this situation right now, it accelerated their growth trajectory, right? I give you one quick example, right? I strongly believe Google will come out from this crisis so much stronger that no one will believe it. Because think about it, right now everybody is online, right? You're just leaving footprints, breadcrumbs, data breadcrumbs all over the place for Google to pick it up, right? Google will know all the websites you have been to, all the things that you have searched, how long you dwell on the website and things like that. Google's going to know you better than your mom.
I think Google already does, actually.
Yeah, exactly. So whatever data they used to collect for 4 or 5 years now is compressed. They just collect all this in 2 months. The amount of data they have, the amount of things that you can do with that data is going to it's going to be unimaginable. I don't know what it's going to do, but okay, just full disclaimer, my family's portfolio do have a position in Google. So that's my investment thesis. I look at the business and ask myself, which are the business from here on, right, will just like lead the pack so far ahead, right, that, you know, it's not even about surviving. It's about them dominating the industry. And yeah.
Go ahead.
And which are the smaller players as well? I think smaller players is something that everyone also need to pay attention, right? Like which are the up and coming thing, right? I don't own this company, but for example, like Zoom, right? Zoom for one has been everybody's communication tool, including myself, right? The only reason
do you think Zoom expected this, or do you think this was they woke up one day and had what you call a pleasant surprise, where they just said,
I think they got a pleasant surprise,
because you know they're not the only platform. You have StreamYard, you have you've got Google platforms, you've got Microsoft Teams. Zoom has been far away from it. Do you think they kind of expected this, or they just wake up and realize, I guess we're really good in pandemics? Do you think they realized this?
Correct. So I don't think they. I mean, there was a joke going on among community that which company would have created the whole virus if it's a man-made event. Then they say Zoom, right? So, because he has the most to benefit. But
we don't have proof of that, by the way. I just want to say.
Just kidding. No, but I don't think they set up the company thinking that the pandemic will come. But the situation just brings forward the business model that works the best in this situation, right? So Zoom is like almost. I think they were just announcing their earnings. They literally had like a 40% jump in usership in a month.
I'm surprised it's only 40%. By the way, I'm surprised it's only, but that's still impressive.
So I don't know. Is it they lost track of the usage or what? But the key thing is look for businesses like this, right? I'm not saying that you should go ahead and buy Zoom, but do use it as an example to search for businesses that will have this kind of trajectory, right? For me, the only reason that prevents me from even taking a position in Zoom is because it's just crazy expensive, right? But otherwise, if you don't look at numbers, just based on business model, I think if you go down the route of finding businesses that will really have exponential growth going forward, I think it's quite a good strategy if you diversify across. If you buy a basket of them, right? 15 of them, 20 of them.
And let me add to that actually. This is changing a lot of habits, right? Structural habits. And when Pete talks about, you know, what industries are going to thrive moving forward, what is going to jump up. What I've noticed looking at the markets looking at the doing business news for the last 6 months, over the last 6 months at least, the one industry that has been more resilient but only in certain spots, like it's spotty, but then there are parts of that industry that are actually resilient, is semiconductors and industrial goods, like these tech goods, because they're related to tech. And it's a simple thesis, right? People are staying home. People are suddenly buying laptops again because they have to work from home. People are buying more data or more memory for their rigs because they want a game and they want to make sure that they can beat that guy who's been trolling them on League of Legends, right? So you start to see more people buying into data centers. So what do you need? Data. You need more memory. You need more testing equipment, more semiconductors. So suddenly you have these companies. So the first question, I think, is when you start to see this shift, and Pete, you can correct me if I'm wrong here, or you can add if it's not a ripe observation. You look at these companies or the industry trends and you ask yourself, well, who can respond fastest to it? Who can add capacity? Because the other problem now is also, well, there's this trend and this company is ripe and positioned to respond to this potential, but are they ready? Do they have the capacity to do it, right? If they're able to do it quickly, they can respond. The second thing too is what's interesting too is that companies are connected. Case in point, supply chains. If Intel suddenly does well, there are a handful of companies here in Singapore that supply to Intel or in the supply chain that could also benefit. I've seen some of them actually grow recently. I've been accused before of being an AEM guy. I do not own any position in this company, but it's fascinating to see that whenever you see this jump in demand for Intel, and then the chips are coming up, suddenly they get dragged up along with them. And then I'm sure also with all of this demand for work from home, and if this suddenly changes things, if suddenly all of us have to keep on doing these things online, if suddenly all of us have to say, you know what, JP, Pete, you're gonna have to work from home 3 days a week. Oh, do you work from home most of the time anyway?
I don't mind. I work from home most of the time, but I don't mind.
Yeah, but if I suddenly say like, hey, JP, you're gonna have to work from home now 3 days a week, guess what? I'm gonna need more of this data, more of these things, and suddenly these companies probably benefit. So, the add-on there also is who's gonna thrive, who is ready to take advantage of that opportunity, because there are also companies out there that are positioned, but they'll just miss out the opportunity because they're not prepared, or they're just oblivious that, we could have it's the Xerox problem, right? Xerox kind of had that problem when they were coming up. They're doing all of these. Kodak was the same way, right? Where are you able to benefit from that? But then also look at that supply chain. I think that's why everybody looks at Apple's supply chain so vigilantly. Samsung, Intel, all these guys, they look at the supply chain going, well, who's going to benefit if the ultimate customer suddenly goes up? Feel free to add any thoughts there, Pete, before I go to another very interesting question from Tiang later on. But yeah, I mean, your very quick thoughts on that.
No, I think you're totally spot on, right? The semicon industry traditionally has been very cyclical, right? Traditionally has been very cyclical because it's kind of like a commodity, and everyone is fighting on price. And you see recently, like Apple talking about them having their own ARM chips, right? And that spooked a lot of investors and stuff like that. So I think if anyone wants to go into the semiconductor industry, if you don't understand what JP just said, you probably need to do more research, right?
Sorry.
Before you even jump into the semicon industry, right? And that actually goes for any investment that you do, any industry that you do, right? Doesn't matter it's semicon, F&B, airlines, or banks, right? If you don't have a working understanding of the industry and the companies, right? How do they benefit if there's a increased demand? Who are their customers? Who are their suppliers? Then you probably really shouldn't buy stocks, right? Of course, trading is another topic altogether. But let's talk about, let's say if you're just investing for the mid to long term, then you need to have a working understanding of what you're going to invest in. And I think, spot on. For semicon, I think if you know what you're doing, actually there are few players out there that are standing to benefit huge chunk. Maybe throw one company, right? Yeah. What would be your favorite horse in this race?
Yeah, no, and again, disclaimer, I'm not suggesting people buy into this sector, but the thought process is there, right?
Yeah, I understand.
Identify the shift and who can stand to benefit. B, is that company or these sectors, are they ready to respond to that? And C, will they survive? Do they have enough cash to weather the storm and survive and take advantage of that? Here's the question now, Pete, and I think this is very interesting from Tiang. I don't know if you're willing to do this, but maybe I think this is more like a walkthrough process. Pete, Tiang is asking if you can share with us your largest holding and walk through with us why you decided to buy it. So this feels like a bit of an exercise. Only if you're confident or comfortable to share with us what your largest holding is and why, and when the thought process of why you got into it and why you're still holding it.
Yeah. So the current largest position, it depends on how the stock market performs. But I think I need to go and check, but I think the largest position right now should be Amazon. It should be Amazon.
Okay.
Top three. Because, definitely in the top three, right? So it's the largest simply because Amazon just like went ahead of everybody, okay?
Has this always been your largest holding, or just has it become one of your three largest holdings only recently? Is this a very recent position?
No, it has been a long position, but the whole stock price only exploded like 2014 onwards, right? So the way I started was actually I was just sharing with some of the students that day that I started this exact same position back in 2012 together with another well-known company, BlackBerry, right?
Okay.
Back then Amazon was at $200 and BlackBerry was at about $7. Okay, and if you're going to do a quick search right now, BlackBerry is under the water. It's at $4 something, and Amazon is like 2,000 over, 2,300 plus, I think. I haven't checked today. But and I no longer hold BlackBerry. I sold it when it was $6. See, so the key thing is that when I first started these two positions, right, the thought process was very simple, right? I felt that both were high growth companies, and I just started a small position as I was beginning to research more about them, right? And that to me has always been the method that works the best when I have some skin in the game, right? So I will just buy a little bit, right? That it will appear on my portfolio when I check the brokerage, and I just study them a bit more. And as I study more and more, I become more convinced that Amazon is getting better and better, right? Midway through, I think it was about 2015, 2016, they announced that they're going to do AWS. That was when the light bulb just went poof, like this is going to go crazy, right? When they go into cloud, I was like, this is fantastic because they are diversifying out of the main business. And right now, I'm not saying that I predicted all this, but I'm just saying that right now, a lot of people still associate Amazon to the retail. But if you look at the annual report, if you look at the numbers, AWS actually is the largest profit provider.
He said Amazon, Sandra. Sorry, someone's asking like what stock you were talking about. It's Amazon.
Oh yeah, Amazon. Yeah, Amazon. Yeah. So right now, AWS, right, the Amazon Web Service, which provide all the cloud services, is their largest cash generator, surpassing retail, right? So I think when you want me, when we talk about walking through, right, the thing is you will always have an initial thesis. You never have a full information, 100%, right? You will always okay, I'm maybe 40% sure that this will become a multi-bagger next time. But it's okay to just start a small position first and just keep on building on your understanding on the company, right? For me, when the whole BlackBerry business, they started doing like funny phones and whatnot, that was the alarm bell for me, right? Say, okay, it's enough, right? Like, I thought they will go very big into the corporate space, into like B2B communication, but it didn't hold true. So always have a thesis, right? I like to start a small position, then I build on the thesis. If the thesis halfway doesn't hold true, then I'll never hesitate to cut the position, right? So for me, BlackBerry was a painful lesson, but it was a good lesson, right? And I never regretted buying both at the same time, because even with BlackBerry, although I lost quite a fair bit, but hey, the Amazon return more than covers that. So to me, that is also one key thing about investing, right? Is that when you have a portfolio of companies that you really understand, just remember that some of them will die, right? Some of them will not make it, because you never have full information, perfect understanding. But some of them will become Amazon. You never know, right? So that's how I build on the position. The more I understand about company, the more I'll go on.
Okay, so you basically, just to summarize, you look at the company, you evaluate if you think it's going to survive and thrive.
Yep.
And then you build a small position and you hold it. And if they start to show more and more promise, then you start increasing the position. And exactly. And sometimes it works, sometimes it doesn't. Okay, but I guess the takeaway there is also just do your homework. Right?
Yeah, just do your homework. Yeah, the more you research, I think your success rate will go higher and higher. The more conviction comes from the research, definitely.
Okay. A lady named Sivile Kaya who has called you bread a few times, which I think is very cute. That's fine. She is asking us a couple of questions about investing in. Well, okay. Let me take two questions. One's from Hari, from Hari Daran, where he asks, do you think tech stocks right now, which you've talked about quite a bit today, do you think that at this point they're overvalued? They've gone up a lot. And on the flip side, Viakaya is asking, well, what do you think about investing in banks and credit card companies like Visa and MasterCard? You talk about two sectors that are very different right now. The tech companies are soaring. Valuations, though, you could argue are very expensive at the moment. Banks down, especially after Warren Buffett sold off on Goldman and JP Morgan, right? Very cheap, though.
Yeah.
What are your views? Overvalued, undervalued? Do we go into the banks because they're cheap, or do we stay with the tech stocks even though they're expensive at the moment? If you think they're expensive.
Yeah. So for me, valuation comes second. Once again, it's about the business again. So when you look at tech companies, of course, I will ask like which tech company you're talking about, right? So for example, like just now I mentioned Zoom and Amazon, both are tech companies, right? But one I find right now still a reasonable price, and one I find almost outrageously expensive, right? So I guess when I invest, I don't invest in the broad sector approach. Like, I'll just buy the whole ETF or not. I don't do that. I buy individual companies. So for me, I'll just look at the company itself and ask myself, hey, is it really too expensive? Instead of saying, oh, I think the whole tech industry is expensive, therefore I don't look at tech, right? I think that will be a very bad way to invest, because in the whole basket of things being very expensive, there will be gems, right? But similarly, when you look at things that are very cheap, for example, the banks right now, once again, it's also looking at which type of banks. If you look at banks that are poorly financed, they haven't learned a lesson from 2008, I think you need to take the cautionary tale, right? But if you ask me about Visa and MasterCard, I don't really consider them as a bank stock, right? They are more like a tech company rather than a tech banking company. So so Visa, MasterCard, I think still got room to grow, definitely. But of course, as more of the peer-to-peer system comes up, right? Like in US, there's Venmo. In Square, Singapore, we have PayNow, we have GrabPay coming up, right? They're not that huge yet, but definitely pose a certain threat to Visa and MasterCard. Okay, but otherwise, I think Visa and MasterCard, if you ask me to choose, I would prefer them to the banks, because I feel that the banks survive most of the time simply because they can facilitate certain transactions, right? So if that facilitation can be replaced by better technology right now with payment system, peer-to-peer systems, then that part may be an issue. One thing that I feel that the banks will always have a much stronger position, right, is that the fact that they can lend you money. Right? That is something that I think the Visa, the MasterCard would not be able to replace in the near term, at least in the near term, because the banks are willing to take out that risk to lend you money to buy your house and run your business. So I think the lending sector is still pretty much a banking game.
Okay, maybe this is a good opportunity for us to go through and that exercise we were doing a while ago, Pete, right? Feel free to push back at me. So we talk about which companies are going to survive and thrive, which companies can best position themselves to anticipate some of these changes. So you talked about Venmo, PayNow, all the Square, all these other companies that are facilitating payments, which could threaten the banks moving forward. And digital banks also might become a threat for some of these banks. But the one thing we also know is that banks have a lot of money, not just to lend, but also to invest and maybe even acquire. Goldman Sachs recently acquiring Folio Financial, for instance, out in the US. They're a fintech company. So see if there are any holes in my approach here, Pete. I'm looking at this as there's a change right now which could threaten the position of the banks. But if I want to stick with the banks, my thought process would be, let me look at the banks that are cognizant and aware of this shift, are investing in these possible shifts right now and using their money to either let me build my own digital bank, let me acquire my own fintech companies, let me broaden my digital footprint so that when the shift happens, I'm not caught down with my pants down. And guess what? I still have all this money behind me at the moment. And that's the companies or the banks I would probably look at investing in. Is that sort of in line with how of course we can't cover an entire investment analysis right in 2 minutes, but generally is that the thought process?
I would totally agree. If I were to looking at the banks now, I would look at banks that are able to pivot using whatever resources they have, like you mentioned, right? Do some M&A.
They do have a lot. Some of these guys have a lot.
Sorry?
Some of these guys do have a lot of resources and equity and assets to do it, right? But it's the question is, well, are they going to do it, or are they just going to go like, nah?
Are they going to do it? Yeah. So I think some of the banks, when you look at it, maybe they're a bit complacent. They don't want to move. But if I'm looking at the banks, I will look at banks that are going to pivot very readily, right? For example, in Singapore, you saw that the main banks are gunning for the digital license, right? And even Temasek Holdings just joined. I don't know what is the model that they joined, but they kind of say that they want to be part of the Libra system by Facebook, right? So
that was yesterday.
Yeah, so when banks are ready to pivot and willing to use their immense amount of resources right now to buy some fintech company and be part of it, I think that would be great news. That would be great news for the banks, right? If the banks are unwilling to move, they are just staying their in their old business, then I think they will be very badly affected by the disruption when it comes at them. And I think it will be like a COVID-19 kind of issue whereby you don't see until it hits you.
How?
Right. Like payments, I think if they don't shift, right, suddenly they will see like a few across a short period, suddenly all the payments leave or depart the banking sector. Right, and go on to peer-to-peer payment. Yeah, and that's what we see in the US, right? In the South, so it's basically US is half, right? The South is Square, the North is Venmo. So and
I didn't know that.
Happened,
okay.
And it kind of happened across 6 months. Across a period of 6 months, and that was a huge impact on a lot of the banking sectors where they
why do you think
they used to rely on transferring money, right? Sorry.
Why do you think the split happened that way? Venmo in the north and what was the other one in the south? Yeah. Why do you think the split happened that way? Square.
I have no idea. I just happened to read.
It was very interesting, like, head scratchers. Yeah. Okay. Yeah.
I don't know.
But maybe it's something that would be interesting to look at, actually. Okay, so Mr. Ashutosh Dixit is asking he really wants to know your views on Groupon.
I have no views on Groupon. I don't know what they're doing now, actually. I haven't. Okay, so the thing is this, as an investor, right, be very ready to say, like, you don't know, and I'm not gonna touch it, because for me, I don't even know what Groupon's business model is right now. I think they shifted a few times, yeah, so I'm not very sure. I'm not very sure what they're doing right now. But if they are doing in terms of like food delivery services and stuff, then I will say stay out of it. Right, that is a money burning black hole.
Food delivery is a black hole.
Yeah, to me, food delivery is a black hole. If you don't use it to tap on other revenues, right? You don't expand from there. You're just doing food delivery. To me, that's a black hole, because it's so competitive, right? People are just compensating the delivery people, and not much money is made, right? So you look at all the food delivery services now. I'm not sure, but I think right now most of them are not even in the cash flow positive state. So, yeah.
Okay, fair enough. We have a number of questions actually since the start of the chat, and I apologize if we weren't able to get to them earlier on when we started this, about digital currencies and crypto. So I'll just compile two of the questions, right? One question was, do you invest in crypto? What do you think of the future for digital currencies as a part of your investment portfolio? Very volatile, especially when you look at Bitcoin, for instance. Crypto, right? The second question I've been seeing in the chats a bit also is your views on the digital yuan. So what kind of change or disruption will this actually introduce, and how is this going to affect, say, Chinese markets, how you invest? Give us your thoughts on the trends right now in the digital currency space, and if you yourself invest in digital currencies.
Yeah. So yeah, I do. I have a small position in Bitcoin. Now, let me just explain like why, right? Is that I'm definitely not an expert in cryptocurrency, not by a mile, right? I do read a lot, as much as I can, about cryptocurrency, but it's still quite confusing to me. The one that I can profess to know much better is only Bitcoin, right? So there are many things in cryptocurrency, right? So Bitcoin is just one of them, and being the oldest, and I think it's the starting currency. So to me, going to Bitcoin is more of a long-term bet on digital currency. So I don't call it an investment, all right? I just be very upfront about it. I call it a bet. You put a small percentage in there, and if whatever they say about Bitcoin comes true, your return will be in the range of 100x or more, right? And to me, I think that has a higher chance of coming true than me buying a lottery ticket. So if you ask me, I don't have a very strong opinion on the cryptocurrency. In fact, when I do a quick research back then, I think over 90% of the cryptocurrency are bad currency, right? They don't turn out to be of any value at all. The one that's still currently surviving and makes sense, that makes any investment sense at all, would be Bitcoin and Ethereum.
What do you make of these moves, these slow but steady moves to, and this push at least to develop the digital yuan in China. I think. I think the question also is, we talk about these big shifts, right? Do you think it's inevitable that the world is going to turn towards digital currencies once we all figure out how it actually works? I think the question is, well, I think one of the reasons why Bitcoin's been so volatile also is because it's not exactly, it's not, you don't have as much money in it right now, and fewer players in Bitcoin. That's why the price.
Yeah, the market cap is still very small. It's like a fraction.
It's a function of people not really understanding it that much. But once people do, and maybe it's a question of when, not if, right? If that happens, do you think it's inevitable that we're going to see a shift towards digital currencies, and what will that mean for markets, Pete?
I think it's very important to differentiate between cryptocurrency and state issued digital currency. There are two different ball games together. So let me talk about the digital currency by the Chinese government, right? I think that's a fantastic move, right? That's a fantastic move because I think eventually, if they want to have more control over the currency system, right? Since most of transaction is already done electronically, for them to develop a digital currency that will make sense, right? Whether is it crypto backed or not, I'm not sure, but it 100% makes sense when it's digital because it just facilitates a lot of transaction outside of China, right? And that makes it makes Chinese yuan a more competitive currency, I think, right? But going back to cryptocurrency, which is like Bitcoin and Ethereum, the key thing is these are still on the very early days kind of thing, and whether government will adopt them is still a question mark, right? You look at how much companies are, for example, Facebook has so much trouble with Libra, right? So,
I'm not surprised. More trouble than I thought they would run into. Yeah, go ahead.
And Libra was trying to get governments on board, trying to get companies on board. PayPal, MasterCard, Visa were once backing them. I think now some of them has already pulled out. So even with a more or less centralized cryptocurrency like Libra was already so rejected by the government, I think a fully decentralized system like Bitcoin will be very hard to be adopted by the government, right? So for me, the future I see in Bitcoin is really more like Bitcoin becoming more of a status of a asset class on its own, right? Like gold, for example, right? No one can claim rights to gold. No one can control gold in that sense. So that's what I see for Bitcoin to be just one form of asset class. And right now the market cap is so small compared to gold. I can't remember. I think it's like less than a few percent compared to gold, right? So I think as more companies, as more people want to have that autonomy from the government, then the development for Bitcoin, the demand for Bitcoin will increase. But I don't think Bitcoin, to be very honest, I don't think Bitcoin will replace payments, for example, right? Because our payments are already so efficient. There's no reason for people to shift to another system that is just equally efficient. It must be something that's leap and bounds better. Yeah.
Here's an interesting comment from Lester, actually. He says that there's a good development right now with Reddit launching their own coin, raising $10 million. And his comment is, which I find very interesting, actually, Lester, a good step towards getting more mainstream attention. Is this just a question of making it more widely accepted or more widely before it to actually succeed?
Yeah.
I think also why you have a lot of these distortions in Bitcoin at the moment, because again, as you mentioned, there's not enough people trading it, or not a lot. Which means that the price can easily, flip one way one day and then flip the other way the very next day or the very next week. It's just a matter of getting more attention and more understanding for these things to take hold.
Yeah, I think one good news is that we see more and more fund managers adopting Bitcoin. Like Paul Tudor Jones recently went into Bitcoin for his own fund, right? He's one of the best known fund managers that we know. So that's kind of like a stamp of approval from renowned institutional players, and you will need more of these people, right, before Bitcoin can be so-called legitimized in a certain sense, and that will be great news, because just think about it, right? When institutional players say, hey, I just want to have a small percentage into Bitcoin, and if that amount of money flow into Bitcoin's market cap is going to explode, right? So that is the best case scenario for Bitcoin, in my view, right? So the key thing is you need more institutional recognition and and not a Reddit launch coin and raise 10 million. I feel that this kind actually doesn't help with the cryptocurrency space. It actually makes it worse. It just reinforces people's view that cryptocurrency is a child's play, is not reliable, is full of scams and frauds, So I think a good step forward is to get more, actually Lester said correctly, is to get more mainstream attention, but I don't consider Reddit as mainstream. For me, mainstream adoption would be like real institutional finance institution, banks, government.
I find that comment very interesting, Pete. My impression, okay, and I'll be the first to admit that this is one area that I'm very inexperienced in, which is crypto and Bitcoin. I've followed blockchain. I actually the technology behind it's very, very promising actually. Yep. But my impression as a noob in the crypto scene is that this is the aim is really to disrupt things, right? But then for it to become more mainstream, or for it to become more to really disrupt or succeed in disrupting, they need institutional recognition. Isn't that just strikes me as being very ironic? You know what I mean? It's a very disruptive thing that's coming in and trying to upend the status quo. But to do that successfully, if you're correct, Pete, is that they need institutional recognition, which means the blessing of the institutions. Am I missing something there?
I think it will be beneficial for both the Bitcoin people and those who are in the government space or institution, right, to come together, because the best way to control something is to be involved with that, right? So if the government just don't want to recognize Bitcoin and let it run wild, and there will be a good chance that you will see large chunk of money flow into Bitcoin in the future, and that's not regulated by the government. But if the government say, hey, you know what, we're going to be one of the early adopters, we're going to figure out how to use it, how to make it part of the system, how to kind of regulate it, although it's not meant to be regulated, then I think the governments will be ahead of the curve. So I think Bitcoin, when it first started, right, it's like saying, it was at the start of the global financial crisis, there was a lot of printing of money, everything is devaluing, so somebody came up with Bitcoin to say, hey, I want something that can hold value. And once again, for me, that is pretty much same as gold. And you can see that the government, US government was controlling gold at one point in time, right? They were saying that it's illegal for you to hold your own gold, and eventually they removed the peg to gold. So, but it doesn't make gold less valuable, right? So, and right now you can see the flip is that now federal banks are hoarding gold, especially Russia, right? They're buying so much gold that it's crazy. So I don't think it's contradictory or ironic in that case. It's just a matter of one is a disruptor and one wants not to be disrupted. But if they can have an early adoption, then actually they have a good chance of actually making.
So there's always a middle ground, right? There's always a middle ground.
I think it's a middle ground.
Or both of them actually say, hey, we should just work together.
Yeah, exactly. And I think that's why like governments like Temasek Holdings is joining Libra project, because will they ever invest in Libra? I'm not sure, but to me, it doesn't lose or risk anything to say let's have a foot in it and see how it works, right?
Sienka
is better to be involved.
Yeah. Sorry, Pete. Yeah, and those are good points. Sienka has a very interesting question here. Will it be possible for laws to impose the banning use of Bitcoin? I do want you to comment on this, but the thing that's been very difficult with Bitcoin, with a lot of these new technologies also, and what lawmakers have a difficulty doing is it's hard to create a law for something you don't understand.
Exactly.
So if you have, I think that's the problem a lot of these lawmakers have. How do I legislate Bitcoin? How do I legislate digital currencies? How do I legislate a lot of these tech issues? I think that's also why the digital tax is so controversial in Europe now, because they can't seem to, it's hard for them to get. It's not a question of is it moral or not. It's a question of, well, how do I understand this? How would you develop a framework to tax that, right? I don't know. Do you think that a law can be drawn up to impose the banning the use of Bitcoin, or even restricting it, or even policing it? If someone like me, and I'm not saying I'm the smartest man in the world, if I can't understand it, and if seasoned lawmakers are having trouble understanding it, will we ever even get that? Or when they finally understand it, won't the technologies change? And then suddenly, oh crap! Now I have to learn this now, and I have to catch up with the tech developments, right?
Yeah. Exactly. So I think the earlier the government embrace Bitcoin, maybe they don't have to approve it, but just start getting involved, there will be a better chance that the government can kind of like know what to do to control it, right? Are there ways to really upend Bitcoin? The answer is yes, right? There are certain loopholes that in Bitcoin that we know of, but to say that you use laws to impose, to ban Bitcoin, it's like saying, I'm going to ban porn using laws, right? But guess what? It doesn't stop it. So I think using laws to stop something has never been proven to work very well, right? So I think that, not 100%. In fact, if you put a law to control something that is highly sought after and in high demand, you're just going to drive it into a black market, going to drive it underground, and they're still going to exist in different forms. So yeah, so that's why in a lot of other countries, for example, there are a lot of shadow banks that's going on, and that is already under the radar of the government. So I think the earlier adoption, earlier they embraced it, will be better, right? I think Nicholas is asking, is there a good way to invest in Bitcoin?
I was about to highlight that actually. Go ahead, Pete.
Yeah.
How would you do it?
For me, I'm quite a purist in that sense. I don't do it through the stock market. I literally like go to the exchange, buy the Bitcoin, and then store it in the cold storage. So I think it's very important for everybody, right? If you want to understand Bitcoin a bit more, just put like $100 and go through the whole process of like buying the Bitcoin, storing into the wallet, putting into a cold storage, and then selling it out. Go through the whole process, and it will exponentially improve your understanding about Bitcoin, and you will be able to come to a better decision, right?
So why I don't go
through? Sorry.
So nothing. There's no substitute for practicing it.
Exactly. Like the best way to play tennis is to play tennis, right? So the same as Bitcoin, and I don't do it through stock market because there is ETF on stock market, but it's very expensive. Like you pay a premium over the actual Bitcoin price. So yeah, and I think Bitcoin has been one of my better performers in this month, when the market is like being slapped left and right. So in a way, I consider it as a bet and consider it as a diversification as well.
Okay. Let me. Maybe we can take two more questions, Pete. I think we're a little bit over time. Yeah. Maybe we can take two more questions just because I think the conversation has been very interesting. Let's see. There are a lot of questions about Bitcoin, Pete, and it seems everybody's got questions about how to buy Bitcoins in Singapore. I mean, let's stick with that. Guys,
just go Google it.
Yeah.
Guys, just go Google it. I don't think I want to go into the nitty-gritty on how to buy Bitcoin, but just go Google it. It's not that hard.
Okay. So fair enough. I mean, there's
just start with $100, right? Just start with $100. Take it as a education fund, right? If in the end Bitcoin goes to zero, you lose it. It's $100.
Okay. So let's go back to markets. It seems I think you've said what you have to say about digital currencies and their position in markets. Someone has asked a while ago. Also, you highlighted Amazon as being one of those companies that you said was going to really. You didn't use the word game changer, but basically the multi-bagger. There you go. I'm looking at Elaine's comment here. Are there any companies out there that you're looking at that has the potential to become a multi-bagger, as Elaine coins it, like Amazon, for instance? Is there a next next disruptor that has the potential to become the next Amazon, say in the next 5 to 10? Actually, no, let's make it 10 to 15 years, because that's how long it really took Amazon to really start booming and really start pumping. Any companies out there?
I think at this stage it's hard to say which one of them. Of course, like you if you're investing, you always should have a watch list of stocks that you're monitoring, and I believe one of them may make it. So it's hard to tell which one will be a multi-bagger. I think as time goes, right, if it's a 15-year horizon, as 4-5 years goes along, then it will become clearer and clearer along the way, right? Your BlackBerry will become more clear that it's a BlackBerry. your Amazon will become more clear as Amazon. So right now, right now, if you were to ask me, it depends on what is the industry you're looking at, right? I think Amazon still has a huge room to grow. Not for the e-commerce side. I think the e-commerce side, they pretty much dominate the US. But the issue is that it's very hard for them to expand that out of US, right? There are already a lot of big players in other countries for e-commerce, right? So I think the big boom that I'm looking at for Amazon going forward is not the e-commerce, it's actually the cloud services, right? So and if you read the Jeff Bezos letter, he himself also mentioned that e-commerce is last of his priority, right? His top priority is to go to space, right? And then he talk about philanthropic stuff, and then he talk about how Amazon can exist as a business going forward in the electronic space, in the e-commerce, in the cloud space. Yeah, so I think for Amazon,
e-commerce is doing well in this pandemic, though, right?
It's doing well, but if you ask me, is there huge growth going forward? I don't think so. Right? In fact, if anything, I think e-commerce space is going to get more crowded, right? You're just going to get more players coming into e-commerce. Yeah. So I don't think that e-commerce will be. So this is exactly why I like Amazon still as a business, because they pivoted, right? They kind of saw that e-commerce is going to be very crowded, very saturated early on, and they started AWS. And right now, a lot of their resources are plowed into AWS and making sure it works and be the best at that category, right? And because that is technology, that is not so much on delivering services, that is technology. Once they are leaps and bounds ahead, it's very hard for others to catch up. Yeah.
Okay, so here's the I guess we can end on this question. I'll ask you to give us some final thoughts, Pete. Shin Lim is asking, are there any views on why Warren Buffett is sitting on his huge cash pile and doing his best impression of Scrooge McDuck? And he's also increased that stockpile also with his recent sale of his shares in Goldman and JP Morgan. What are your views on this? I think we touched on this a little bit, but I guess it's worth going back to, I guess, as a talking point, right? What is the Oracle of Omaha waiting on? There you go.
I think for Amazon, I mean, it's great that this is the last question. Because I don't know if you can hear my daughter; she's been screaming, but you must understand that for Warren Buffett, right? He was a very different person in his early years. I'm not sure if you all read about him, right? In the early years, he was much more aggressive. He would buy like damn cheap cigar butt stocks.
Do you think that's with age?
I don't think that's with age. It's just a matter of his portfolio is so much bigger. It's hard for him to go and buy cigar butts, right? And now, last time he runs the partnership, so it's basically him and a few people's money. But now it's like the responsibility is huge. It's like everybody's money, and with so much retirement funds, pension funds investing in Berkshire, I think the responsibility on him is a lot higher. So for him, I think if I'm at his position, I'd rather be safe than to go for exponential growth. You get what I'm saying?
So it's the risk profile of people investing in him now. Basically, because these pension investors are like, hey man, you can't really go too cavalier with our investments because we're managing retirement funds. Is that it?
Yeah. Okay. I don't think they tell him that, but I think he himself said it in the recent AGM, right? Whereby he's investing people's money, he's protecting people's capital. So I think for him, he rather miss out on the high growth at this point in time and be safe, right? He doesn't mind just getting a 10%, 15% return that year. It will be huge given his portfolio size, right? So always look at your own objective, right? Don't just compare to Warren Buffett and say, hey, Warren Buffett is not doing anything, therefore I shouldn't do anything. Yeah, maybe he's not seeing good deals, but
maybe you are.
Yeah, maybe you are seeing good deals. Maybe you are in that niche industry that you know, right? Warren Buffett never knew about tech. He always talked about how he missed out on Google, right? He kept on harping on it all the time. So don't read into Warren Buffett's buying and selling too much, but have your own understanding like, hey, what is my investment thesis? What do I want? What is my holding period? Right? For Warren Buffett, to be very frank, I'm not trying to say that he is less of an investor now, but if I'm in his shoe, I will behave the same because I will be more careful. I would rather be safe than sorry. Right. And for him to have $130 billion waiting for the next drop, like what you mentioned, possibly the next reckoning can be coming. Hey, it's not a bad idea, you know. It's not a bad idea for him. But just remember this: when we see 130 billion, it seems like a lot, but remember, even more of his money is already invested.
There are so many questions coming up, Pete. I do want to ask you this one thing from Jack. It's a little pressing here. You did mention apparently that Bitcoin is your best performer this month as compared to others. So he wants to know what you're doing with it, basically.
Oh, I'm just holding it. I'm just holding it. Best performance in terms of the paper increase, the paper gains. But I didn't sell it.
Are you scared that are you fearful of something similar to, I'm going to say, end of 2017 when Bitcoin hit, what was it? How much did it hit? 15,000?
About
20K, and then it plunged down to 7.
Yeah,
I remember. Is that a concern for you, given the nature of that particular investment and market?
Yeah. So you see, the good thing about retail investors, right, like Jackie or even Seka, right, is that you are investing your own money. You have permanent capital, right? Same as me, although I'm running my family's fund, they kind of let me have permanent capital. So I can stay invested even if the share price tank like 50% tomorrow, if I still have my thesis intact, right? But for people like Warren Buffett and for other fund managers out there, they are investing other people's money. So for them to see that sort of volatility is kind of like unacceptable for their investors, right? Like what you mentioned, the pension fund will probably go berserk, right? So having that permanent capital kind of changes the way I invest. So I'm not that trading it back and forth. For me, Bitcoin, my thesis is that it will do well in the future. Therefore, I'm holding it as a long-term position, right? If it really drops, then I would look at the position sizing and see if I want to add on a bit more. But once again, current view is still that is a long-term bet that has a very good risk to reward ratio to me, right? But I will not make it a significant position unless it becomes clearer. So you see, it's the same thesis as I invest in Amazon, right? I first put in a few $1,000, and then as I get
so you're in wait and see mode.
Familiar, then, yeah. Sorry.
Okay, got it. Okay, so we are on wait and see mode basically.
Yeah. So now it's really wait and see. If it goes to 20K, that will be great news, right? And then if it changes my portfolio composition, then yeah, I might be forced to sell it because I have some rules for my portfolio that I need to follow as well. So that could be great news. Yeah.
Okay. So look, there are a lot of questions, and I'm not sure if we can get to most of them right now. Is there a way for other people to keep asking questions or keep the conversation going, Pete, on the Buffett Online School's point of view? I know that the folks, you can share on MoneyFM 89.3's Facebook page if you have questions. We'll try to get to them. And Sean also takes a look at those questions. So if you can't get to Pete, Sean's also a great guy to talk to. But generally, Pete, is there a way for them to get back to you with some of these other questions? There are questions about the insurance concerns of Berkshire, cigarette stocks. Any way they can keep the conversation going with the Buffett Online School?
Yeah. So we I think Rash has talked about the classes that we hold. We do hold a weekend class, and right now it's a 3-day weekend class. We call it Options Millionaire Intensive. It's a 3-day class to talk about many options. But if you have any questions of this during the class, if you have those questions, do bring it up to us as well.
Okay. Final thoughts, Pete. Final pieces of advice for people before we close this up. And I do want to thank everybody for your
thanks
being
everyone.
active, participatory, and being very patient. We tried to get everybody's questions. We know we did not, but we'd like to keep the conversation going. I'm going to leave it to Pete for any last words of advice or wisdom for investors, both seasoned and elementary at the moment. Anything you'd like to tell people, Pete?
I think I would just end off by saying that right now, no matter what, whether you're buying businesses or you're buying index as a investing strategy, right? There are opportunities out there, right? And don't be too concerned with whether the stock market will go down tomorrow or go up tomorrow. Just enter in trickle in, right? Walk into your positions. Invest consistently. I think one of the best advice I've ever heard is that it's not about timing the market, it's about your time spent in the market. And that's really true for myself, right? Being in the market for more than 12 years. A lot of times is the consistency of investing that brings the most return. Yeah.
Very wise words there. And on that note, I'd like to end this very interesting conversation. Keep in mind that the conversation can be kept up. We will be fielding your questions both on MoneyFM 89.3's Facebook page and also on the Buffett Online School. I would like to thank Pete for joining us today, and also
thanks, JP, for the great interview.
All that. And always a pleasure for me to talk about markets and answer some of these questions. There's a wellspring, an endless wellspring of questions, because you shouldn't stop asking questions. And hopefully we've answered some of them, and we've helped you guys help you make better investment decisions moving forward. Keep track of what goes on, and keep track of the structural changes that are happening, and who might be in the best position to either survive or thrive, right? Pete, thank you so much. Have a great afternoon, guys. And on that, JP. I will, guys, okay? Have a good weekend, everybody. And very nice to meet everybody. I look forward to speaking with everybody again. And it's always a pleasure.
All right. Thanks, everyone. See you soon.
Thanks, guys.